Welcome to the Stock Market Daily News Podcast. Today is March 30th, 2026, and we're breaking down the most important moves from yesterday's trading session. It was another volatile day across global markets, with the major U.S. indexes all taking a hit as geopolitical tensions, especially the ongoing Iran conflict, continued to ripple through stocks and commodities. The S&P 500 fell over 1.6%, the Dow Jones dropped almost 1.75%, and the Nasdaq led losses, tumbling more than 2%. The big story? A massive global sell-off, as investors try to gauge just how far energy shocks, inflation fears, and war risks might go. We'll break down how this is impacting specific sectors, what smart money is saying, and where opportunities may start to emerge. Let's get right into today's top market stories. First, the numbers don't lie. Nearly $11.5 trillion have been wiped from global stock market capitalization this month, according to Bloomberg. The Dow finished at 45,167, while the S&P 500 and Nasdaq are both firmly back in correction territory, each more than 10% off their recent highs. The global energy shock has sent oil prices up about 45% since the start of hostilities, with Brent crude ending Friday above $114 per barrel. That's stoking inflation fears and weighing on everything from transportation to manufacturing stocks. Investors are running for cover, with traditional safe havens like gold seeing some profit-taking, but still up sharply year over year. What are top analysts and strategists saying about the sell-off? According to Mohamed El-Arian, even diversified 60-40 portfolios, 60% stocks, 40% bonds, are posting their sharpest monthly losses since 2022. Meanwhile, Marko Kolanovic argues that delays in reopening the critical Hormuz Strait are exacerbating the global economic hit and that attempts to manage oil prices have largely failed. Market participants have lost some faith in the so-called Trump put, the idea that policymakers will always step in to prop up stocks. The takeaway? Expect more volatility as markets struggle to price in so much geopolitical uncertainty. Turning to the tech sector, concerns are rising over an AI-driven bubble. Defensive-minded fund managers like GQG Partners warn that sky-high AI capex can't last forever. They see risk of an abrupt reversal in popular tech names, especially if economic growth slows and corporate earnings come under pressure. Their strategy: tilt toward defensive stocks like insurance, utilities, and consumer staples, sectors that look historically cheap and may provide some ballast if the S&P 500 continues to slide. On the other hand, some bright spots are appearing after the correction, especially in Indian mid-cap stocks. Analyst consensus points to significant upside for names like KPIT Technologies, Kalyan Jewelers, and ITC Hotels, all projected for over 50% potential gains in the next year. Meanwhile, with nearly 950 Indian stocks at 52-week lows, history suggests forward 3 to 6 month returns could surprise to the upside. For the disciplined investor, market extremes often mark the start of new opportunities, even if more near-term pain comes first. Rounding things out, there's a major currency angle too. The US dollar has slipped more than 6% against the euro in the last year, boosting the value of international assets. ETFs like iShares Emerging Markets Dividend are seeing a tailwind as both foreign stock gains and dividend payouts translate into higher returns for dollar-based investors. Let's recap. The Dow closed at 45,167, the S&P 500 at 6,369, and the Nasdaq at 20,948, all sharply lower on the day. The common themes: war risk, surging oil, global inflation worries, and questions about whether defensive sectors can truly shield portfolios. Keep an eye on U.S. employment numbers due later this week, updates from the Fed, and any signs of de-escalation overseas. That's a wrap for today's Stock Market Daily News Podcast. Subscribe to stay updated, and join us every weekday for all the market intelligence you need fast. See you tomorrow.